obviously, I mean, there's two things here. There's the macro situation, but there's also from a credit point of view, obviously the financing situation for companies, right? So on the financing side, I mean, higher rates, less liquid markets, much harder to get access to financing is not great. But from a corporate perspective right now, I mean, that's not a critical issue from a credit standpoint because most companies that we see are pretty well funded. But obviously, there's a limit to how long that can go on for.
One of the other big announcements from the mini budget announcement, whatever you want to call it, on Monday out of the new chancellor was that they're not going to be extending the energy measures beyond April. How is that going to affect some of the more energy intensive sectors of the economy?
Yeah, no, listen, this is very interesting because obviously, there's a whole issue around the fiscal sustainability of the government's program. But what they've done is by basically announcing the 6-month energy price cap is sort of trying to bridge through this winter, right? So that's obviously capping the energy prices for households and businesses, which is a good thing, and that will obviously limit the rise in inflation that we'll see over this critical winter period. But having said all that, I mean, obviously we still expect energy prices to stay really very high, elevated right through next year actually, and obviously that's really going to keep pressure on inflation, on the Bank of England, and actually ultimately will keep companies, make it harder for companies to maintain their margins in a slowing growth environment. Yep.
Paul, what are the refinancing needs like across the UK corporate sector in the year ahead?
Yeah, I mean, the thing is that actually for us at S&P, I mean, we take account of, in terms of calculating our liquidity for companies, we actually expect companies to refinance more than 12 months prior to maturity of their debt. So 2023 maturities have largely been dealt with. So we're now starting to see companies looking at their 2024 maturities and trying to refinance that. Now, that's obviously difficult. So certainly for more speculative grade companies, you're starting to see some more sort of amend and extend type transactions in the bond market, which is basically trying to get existing lenders to extend the maturity of their outstanding debt for a fee. And actually, as we go forward, we're watching very carefully to see whether companies are able to refinance, and some more distressed companies or stressed companies may well decide to try and buy back some of their debt at lower value, at stressed valuations, and for us, that's potentially a default.